That is why I was playing back the video. You were asking me a question. I was nowhere to be found.
Okay.
So I was nowhere to be found. So it was the playback. I realized that you were mentioning Sheriff, the Sheriff there, that I was around. You know, that was the part of the fasting too. You go
Okay.
to break the fast. So normally I have that weekend, unless I do the playback.
Okay.
Then I'll be in tune. Yeah.
Okay. Okay. So I was saying the last time that you have budgeted that you are going to produce 10,000 units at a cost of what? 70,000. That is the budget. By the end of the day, you produce 12,000 units at a cost of 75,000. And I was saying that all things being equal, how much should you have incurred for the 12,000 units? How much should you have incurred for the 12,000 units? It should have been how much?
About 84,000.
It will be
84,000.
84,000. How did you get 84,000?
If 10,000 would have costed 70,000, you get the cost per unit. Then you multiply it, that is 7 by 1,002. Or is it 12,000? Yeah, by 12,000. So
Okay.
7, 12, 84. So 84,000.
Okay, okay. And that was it was at this place that Kathy was saying that if more, let's divide, if less, something divide.
Yeah.
It was at this point that she said something like that the last time. But don't worry. The issue is that we are saying that we want to produce 1,000 units at a cost of 70 Ghana cedis, and we end up producing 12,000 units. How much should this cost us? If you are saying that we are producing 10,000 for 70,000, and we end up producing 12,000, well, how much should this cost us? How much should be the cost of the 12,000 that we produce? That's what we are talking about. The easiest way to do this is that find the cost per unit for the one that you have to produce. If you are producing 10,000 at 70,000, what should have been the cost for each unit? What should have been the cost for each unit? Joycelyn, what should have been the cost for each unit?
Can I try?
Yes.
7 cedis.
It's 7 cedis, isn't it?
Yes.
So if one unit is 7 cedis and we are now producing 12,000 units, what will be the cost for the 12,000 units? What will be the cost?
Linus, it will be 7 cedis times 12,000 units.
That will give us how much?
Okay, 7 times
84,000. Are we there?
Yeah, 84,000.
Okay. Another way of doing this is that divide the actual unit over the unit that you want to produce. Then multiply it by the amount that you budgeted for. So this will be this divided by this, all times 70,000. How much are you getting? How much are we getting?
84,000.
84,000. So anyhow you do it, you get the same answer. Joycelyn, are you okay there?
I'm okay with the second approach. The first one, I'm confused.
Okay, don't worry. Pick the one that you like.
Okay.
All right. Prima, are you okay?
Seriously, I'll be okay. I was attending to the little girl, so
okay.
I don't have to.
So it's not my fault. That's what
it is not at all.
Okay. Where is Kathy?
I'm sure she will join soon.
Okay. So let's pick, this is how we go about flexible budget. So let's pick a question. Let's pick a question. So in this case, let's come here. So let's assume that for the 12,000 units, the actual cost that we incurred was 75,000. What is happening? How much should have this cost us? It's 84,000, isn't it? But how much did we incur? 75,000. What is happening?
You have made a gain.
We have
more.
we have saved a cost of what?
1,100.
So, okay.
11,000.
No.
11,000.
We have saved a cost of 9,000.
9,000.
So
Okay.
that 9,000 will be we do it favorable. So for flexible budget, what we do is that we have the flexible budget, we compare with the actual. So we can have flexible budget here, then we have actual here. This is the actual cost incurred. So we come here, we say the actual unit is 12,000. We should have incurred 84,000, but we end up spending 75,000. It means that we have saved a cost of what? 9,000. So the 9,000 place here, we put variance here. Variance. Are we there? And then we add F to this one. We add the F to the 9,000, showing that it's favorable. Favorable means you are making a gain. Are you okay? Assuming this should have cost us 75,000 and we incur 84,000, what is happening?
We've made a loss.
We have
Adverse.
okay.
Adverse.
So we have 9,000. This will be what? Adverse. That is all about the flexible budget. So you just ask yourself, the activity that I was able to, or the quantity that I was able to produce, how much should that quantity have cost me? How much should it have cost me? And how much did I spend? Then you compare the two. So we are going to pick a question, then we see how we go about issues like that. Are we okay? Okay, so let's pick question. Let's pick the question 6. Let's move on. Katia will say moving from complex to something. Okay, let's pick the question 6. Who is reading? Question 6, who is reading? What shall I read for us? What shall I read for us?
Okay. Question 6. A company has prepared the following 6 budgets for the coming year. Sales 10,000 units, production 10,000 units, direct material 50,000, direct labor 25,000, clearance 12,500, fixed overhead 10,000, total 97,500. Budgeted selling price is set to this selling. At the end of the year, the following costs have been incurred for the actual production of 12,000.
So the cost given to you over here are the actual costs, isn't it?
Yes.
Yeah. So you have to find your flexible budget, which is a flexible cost, to compare with the actual cost here. Let's move on.
The actual sales were 12,000 units for 122,000 cedis required to set a flex budget for the actual activity for the year.
Okay. So let's come here. So you should prepare flexible what? Flexible budget for actual activity level. So let's come here. We have the flexed budget here. We have the flexed, we have the actual, we have the variance. Okay, we put them in cost. They will put a currency sign here. So what you do is that you have to put the output level here, output, or the actual units. So what was the actual units that were sold? What was the actual unit sold?
12,000.
12,000.
12,000. So you put 12,000 under this one because we are going to do this for, we are going to do it for the actual level, which is 12,000 units. Are we going to have any variance? No, this will be dash. 12,000 against 12,000 is dash. So let me put 0 here. Okay. What will be the first item that we are going to have? So after this one, put the currency sign here. So what is the first item that will come? What will be the first item that will come? What should be the first item that we put there? I can't hear the person talking. What are the items? What items are we going to compare? Joycelyn,
Material. Yes.
the first one that will come is what?
Budgeted or fixed.
No, we are not doing fixed budget. We are doing flexible budget. So what will be
Okay.
what are we producing? What are we incurring the cost for? What are the items that we are going to consider? That's what I'm saying.
Direct
Ah,
material.
Direct materials.
Why should you consider direct material before sales? That first item is the sales.
Sales.
Okay. So sales. How many units were sold?
Let's see the question. 10,000 units.
How many units were sold? What was the actual unit sold?
10,000. 12,000.
12,000. How much do you want to sell that unit?
You wanted to sell 12,000, no? 2,000.
How much do you want to sell unit of product?
10 CD.
10 CD. So if all things being equal, how much do you have
Right.
realized from the actual sales?
120.
122,000, no?
No, 120,000.
One what?
120. Okay, the
120,000.
12,000 by the
120,000. That should have been the actual value that we should have realized from the sales. If you are selling one unit 10 CD, now we are selling 12. The actual money that we should receive is 120,000. But how much do you receive?
122,000.
122,000.
So
Is it favorable or
2,000.
adverse?
Favorable.
Favorable.
This is sales, so we have a favorable here. Do you get it?
Yes.
Joycelyn, do you get it?
Yes.
Okay, the next item is direct material, isn't it?
Yes.
Okay. Direct material. Direct material cost. If you like, come and put all the actual cost here. Direct material actual is 60,000. So the actual, you won't do any calculation. We do calculation for only the first level. Okay. So let's come here. The direct material cost is what?
Yes, 50.
50,000.
The direct material cost is what?
60,000.
For how many
For
units?
the budget, 10,000.
So right now we have produced 12,000. Are you still going to incur 50,000?
No, it will be more.
It will be more. So what will be that cost? What should have been the actual cost to us?
We get 72,000.
It will be
It should have been 72,000.
70.
2,000.
How do you get a 72,000?
Because it's going to be less. That is going to be more.
Okay.
Because 50 is for 10,000. So
Okay.
12,000 is expected to be more.
So
Maybe it's going to be more.
So 12,000 is now how much?
12,000 will be 72,000.
Now what I'm getting over here is 60,000.
That is the actual.
No. You see, you want to produce 10,000 units for 50,000.
That will cost 50. Yeah.
Now you end up producing what?
12,000.
12,000. So for you to get the answer simple is the 12,000 over the budgeted unit times the budgeted cost. Or if you like,
Yeah.
if you like, you can do 50,000 over 10. You are going to get 5 cedi.
That is it. I'm rather multiplied by the actual cost.
So how much should you have incurred?
60,000.
I also did the 50,000 over the sales figure. That's the 10,000 units.
So did someone also get
Yes,
60,000? Jocelyn, what did you get?
The units, I had 5. I did the 50,000 divided by 10,000.
Okay. And you get 5 cedi per unit, isn't it?
Yes.
So multiply by 12.
Jocelyn, what did you get?
12,000. 5.
That is 5 cedi per unit, isn't it?
Yes.
Now you have produced 12,000 units. So what should have been the cost?
60,000.
60,000. You multiply by 12,000.
Yes.
So what compare the two? The flex and then the actual.
No,
Is it something?
They are the same.
They are the same, right?
Yes.
So you
Yeah,
put
so
zero.
dash.
The next item is what?
direct labor.
Direct labor. What is the actual cost for direct labor? The actual cost, we don't do any calculation for them. The actual cost is what? 28,500. So come and put the actual cost here, 28,500. So what we want to incur how much for 10,000? How much are we incurring for 10,000 units?
85,000.
25,000.
25,000, right?
Yes.
Right now, if we want to incur 25,000 for 10,000 units, how much should we have incurred for 12,000 units?
2.85. That's per unit.
2.85.
85.
Is it per unit or total cost?
Per unit.
Then what are you going
So
to
the
do?
the total is 34,200.
34,200. Okay. Are you sure 34,200?
No,
People can confirm.
no. The budgeted cost per unit will be 2.5.
2.5, okay.
So, yes, multiply by the 12,000
Okay.
actual level activity, you get 30,000.
You get 30,000.
Yes, please.
You see, if you don't know how to do this, just find the actual unit over budgeted unit times the budgeted cost. That is all. 12,000 over 10,000 times 25,000. Are you okay? So what is happening?
There is an adverse.
That is what?
Hey,
The difference is here adverse or favorable?
yeah,
Favorable.
favorable.
It's favorable.
Favorable.
1,000 what? 5. We're supposed to spend 30,000, but we end up spending 28,500. That means we save some cost.
1,005.
Okay,
Favorable.
let's move on. The next cost is what? Variable overheads.
Sorry, I'm lost.
Okay, what is the actual cost for variable overheads?
Please, I have a question.
Okay,
Please, how did you get the 30,000 for the labor?
what did I get? What?
The labor,
How did I get the what for the labor?
the 30,000.
Okay, okay, that is nice. We have budgeted that we are producing 10,000 units, isn't it?
Yes,
And we are going to incur a cost of what?
25,000.
25,000. So it means that 1 unit is how much? What will be the price of 1 unit?
Um,
2.5.
0.25.
0.25. How do you find the cost?
No.
It's 2.5, right?
It's
The cost is the
2.5.
labor cost over the number of units, not number of units over labor cost. Mousy, are you okay now?
No, you said the cost.
We are producing 10,000 units and we are incurring a cost of 25,000. So what is the cost per 1 unit? Cost per 1 unit is the total labor cost over number of units. That is how we calculate it. So it will be 25,000 over 10,000, not 10,000 over 25,000.
Okay.
Posh, are you okay?
Yes, please.
Are you sure?
Yes, so we are going to get the per cost to be 25.
They are going to get cost per unit to be 2.5, isn't it?
Yes.
So if we are incurring 2.5 for each unit, how many units did we produce at the end?
12,000.
So,
12,000, isn't it?
yes.
So how much should have 12,000 cost us if you want to spend 2.5 cedis on 1 unit? How much should 12,000 cost us?
Okay. Okay. I'm getting it. 30,000.
It's what?
30,000.
30,000.
Yes, please.
Are you okay now?
Yes, please.
Okay. I'll say the easiest way of doing this is that take the actual unit over the budgeted unit, multiply it by the budgeted cost. So it will be 12,000 over 10,000 times 25,000. You are easy, you are good to go. Are you okay?
Okay.
Okay. Let's come to variable overheads. What is the actual cost for variable overheads?
15,000.
What is the actual cost?
15,000.
15,000.
12,500.
15,000.
Oh, it's a different question.
So we want to produce 10,000 for how much?
For 12,500.
So if we want to produce 10,000 for 12,500, we end up producing 12,000 units. How much should we have incurred? How much should have 12,000 units cost us?
15,000.
18,000.
18 or 15?
15 is the cost.
Yeah, the flex is also 15.
The cost is 12,500.
It is 12,500 though. It's not
Yeah.
15,000.
12,500.
It's
Then when you
12,500.
divide it by, yeah. When you divide it by the budgeted
10,000.
output of 10,000, you get 1.25. When you multiply it by the actual level of activity, which is the 12,000,
12,000.
you get 15,000.
Okay.
Are we all getting 15,000?
Yes.
I'm
The
saying
way
that
you were saying the 15.
the easiest way for you
that's
to do this, don't go and be struggling to find per unit. Just take the actual unit over the budgeted unit times the budgeted cost. 12,000 over 10,000 times 12,500. What are you getting? Are you making any gain or loss?
It's break even.
Okay. The next one is fees overheads, isn't it?
Yeah.
Okay. The actual cost for fees overhead is what?
11,000.
11,000. Okay. For the actual this thing, we don't do any calculation for them. We just compare the actual with how much should have that cost us, based on what we budgeted for. How much should have that cost us? How much should have that cost us? So it means that the budget that we prepared first was a fixed budget. Now there's a changes. We have to amend it. That is amendment that we are doing for the flexible budget. Are we okay? Okay. So how much did we budget for 10,000? How much was the budget for 10,000?
10,000.
How much was the budget?
10,000.
And now we end up producing 12,000. So how much should we have incurred?
So do we flex fixed overheads? We are fixed, irrespective of level of activity.
Is that?
I said do we flex fixed overheads?
Okay.
But they are considered fixed irrespective of level of activity within a given range of time frame.
Okay, that is nice.
So only maintain the 10 and 11.
Okay, that is nice. So we don't find fixed overheads because they are not based on the level of activity. Whether you produce one or not, you will still incur the same cost. So don't go and flex the fixed overheads. Are you okay? So no matter how the activity level, the fixed overheads will still be the same value because it has nothing to do with the level of activity. So we do the flexible budget for only those costs that varies with the output level. So fixed overhead doesn't value with the output level. That is a nice answer. So what should have been what is the difference?
1,000, which is adverse.
Is what?
1,000 adverse.
Adverse. So if you like, you can add all. So this will be what? It will be 2,500 February, isn't it?
Yeah.
So I thought you said, oh, okay. I was
Yeah,
about to ask the fixed overhead that you said you don't flex it.
Yes, that's why we are repeating the budgeted one.
And then the fixed one, that will work it the same way as we work the old one.
Is that?
I'm saying that the fixed overhead. Hello?
Yes.
I'm saying that the fixed, you say we don't flex. So the 10,000, that one we brought it from the question, but the 11,000, they will work it like the one that we did.
11,000 is the actual one. We don't do anything to the actual. Are you okay?
No.
You hold on. Okay. Jocelyn.
Yes, sir.
Yes, you can talk now.
I was asking that you said the fixed overhead, we do not do anything to it.
Yes.
So the 10,000, did we work it like the way we work the direct material and stuff?
No. We just take the budgeted one.
And then the 11,000 too.
The 11,000 is the actual. We are comparing the flex one with the actual. So you just pick the actual. This is the actual cost incurred. So this will be for the actual.
Oh, okay.
So actual, we don't do any calculation for actual, but we are saying that we are planning to produce 10,000 units at the various costs. Now the output level has changed. So the cost should have also changed, isn't it?
Yes.
So we are saying that if the cost should have also changed, how much should they have changed to? That is the workings that we have done under the flex budget. Then we compare with the actual cost incurred and see whether we spend more or we spend less. So for the actual, we don't do any workings for them.
Okay.
Are you okay?
Yes, please.
I hope you are okay with how we got these figures.
Yes.
Okay. Let me also show you another one. You see, this is the beginning. We can also prepare this like this. Okay. This can also be prepared like this. So what we are going to do is that we do it like profit or loss account. Then we have variable overheads, variable cost. We have the variable cost here. Then what we do is that we separate the variable cost from the sales to get contribution. You prepare like profit or loss statements. But if you do it the way we did it first, we don't have any problem because the question wasn't prepared based on profit or loss. So sometimes you prepare it based on what the question is saying.
Variable overhead will come. So,
Okay. So before contribution will come here.
yeah.
So the contribution will now be this minus this minus this minus this. Okay. So the next thing that you do is you subtract fixed cost from what? The contribution. Then this will be your profits. So you can prepare it on profit or loss basis, but it's not compulsory because the question didn't. The question was not prepared on that, but sometimes the question will be prepared based on profit or loss. So you have to show all these things. So even if you do the first one, we don't have any problem with that one. But I'm just showing that maybe you can have a question where it will be like this. Are you okay? All right. We are done with the first one. Do you understand how we calculate the cost for the flex budget? Are we okay with that? Are we all okay?
Yes.
What are you okay? What are you there? Okay.
Yes, please, I'm here.
Okay. You are okay. Are you okay?
Yes.
Okay. Let's look at another question, then we see what we can do.
Sadela, you didn't forward these materials to us.
No. Budget and budgetary control is there. Okay. It's not a question on each one. All the questions are under the lecture notes.
Okay.
If you see the lecture notes, question will be added to all of them. So I'm looking for a different question that we can solve based on it. Flexible budgets. Okay, let's look at this question. Question 18. Question 18. Who is reading for us? Question 18. Mercy, read for us. Mercy.
Right. Okay, sir. Toby Nigeria Limited is a publishing company established in the early 1970s. The company has recently been taken over by Superior Quality Limited, a multinational company operating in Europe. Mr. Edith Akpan, a staff of Superior Quality Limited, has been sent from the company's headquarters to review, among other things, the budgeting and reporting system used by Toby Nigeria Limited. During his visit to all the departments, he discovered that monthly budgets are prepared for each department in the company. Upon request, the last budget statement for the school stationery production department for production V was presented to him. The budget statement presented was as follows. Budgeted statement for period V department, SSP department, actual result, units produced, 45,000, labor hours, 130 and 50. We have the actual results, the budget, and then the variance. Direct materials for the actual, we have 907.2. For the budget, 800. And then for the variance, 107.2 negative. We have direct labor, 442.8. The budget is 400. And then the variance is 42.8 negative. We have variable production overheads, which the actual say 284.4. The budget is 240, and then the variance is 44.4. We have fixed production overheads with the actual 212.4, the budget 187, and then the variance 25.4 negative. We have variable admin overheads. We have the actual budget to be 147.6. We have the budget to be 133, and then the variance to be 14.6. We have fixed admin overhead. The actual is 180, the budget is 160, and then the variance is 20, which is negative. Then we have our total cost, which is 2,174.4. We have our budget 19220, and then our variance to be negative 254.4. Sales value of production, 2,790 to be actual, budget is 2,480, and then the variance is 310. Then we have the profit, which is 615.6 of actual results, budget is 560, and then the variance is 55.6. Mr. Tola Ademola, school preparatory manager. Interaction with Mr. Tola Adebola, the secondary school manager, with the school stationery manager, revealed that the budget statement presented was based on 40,000 units with a standard labor content of 3 hours per unit. Mr. Akpan observed that Tola was not in any enthusiastic about the budget system. He saw it as a pressure system imposed by the company's top management to indict some of the managers. He pointed out that the system was hurriedly introduced by High Flyer Consult about 12 months ago. The consultants never took time to talk to the manager or provide explanation that could assist users to understand the system. The experienced school stationery manager was doubtful about the competence of the consultant. He was of the opinion that the system introduced in Toby Nigeria Limited was either a ready-made one developed for another company, or that the consultant did not understand the system well enough to give him the needed to educate the users. He concluded by stating that he was sure his department made a loss as against the positive figure recorded in the report, and there was the possibility of reporting a loss at another period when profit was actually made. The situation reported above cut across virtually all the departments, and so the need to nip the situation in the bud became very urgent. The task of making budgeting system more useful and acceptable in a biased environment like this, no doubt, seems difficult thereof. Mr. Akpan had requested from you an advice that will assist him in getting out of the woods required. Redraft the budget statement in a more informative manner. B, discuss the behavioral problem brought out in this situation. And 3, discuss the steps Mr. Akpan should take to remedy the situation.
Okay. Thank you. Thank you very much.
You're welcome, sir.
Okay. So this is the budget given to us, isn't it? We have the actual results, and this is a fixed budget. All the items given to you over here are fixed budget. For the budget, it is based on fixed budget. By the end of the day, they produce how many units?
45,000.
So how many did we budgeted for? How many units did we budgeted for?
40,000.
So it means that all the costs under the budget are all based on what? 40,000. Those that are driven by units are based on 40,000. Okay. And what was the actual hours used?
Hours 130,050.
What was the hours that we budgeted for?
120,000.
How do you get a 120,000?
3 hours per unit multiplied by the level of activity budgeted.
Okay.
40,000.
So we budgeted that we are going to use 3 hours for each unit, and we budgeted for 40,000 units. It means that we are going to use 120 what? Hours. 120,000 hours. That is very okay. Are you okay with that part? The 120,000 hours. Are we okay with it?
Yeah.
Yes, please.
Okay. Let's come here. So what do? We now have to find, because this 800 is based on what? 40,000, isn't it? This 800 over here is based on what? 40,000, isn't it?
Yes.
Now that we have ended up producing 45,000, are we going to still be having the 800? We want to incur 800 for 40,000, and we end up producing 45,000. We still have to incur 800 for 45,000. No.
No.
Are you okay there? So how much should you have incurred? How much should you have incurred? How much? How much should you have incurred?
$900.
900.
Yes.
Okay. Do you get that? Do you get 900?
But are we still using the actual unit over budgeted times budgeted cost?
That is how you do. It doesn't change anything. That's how you get it. Are you okay?
Okay.
For everything, that's how we do. 40,000 is 800. How much should be for 45,000? It is 45,000 divided by 40 times 800. How did you get it? Do you get 900?
Yes.
Okay. For labor, what are we going to use? Are we going to use unit level or labor hours?
Labor hours.
We are going to use labor hours because labor cost is driven by labor hours. So what was the labor hour we budgeted for?
120.
120. How much did we use?
130 and 50.
So what should have been the cost for that?
There should have been more.
And now, how much should have been that? How much should be that? Okay. So let me put this one together. Let me put a flexible budget here. Flexible budget for actual activity. Actual activity level. Okay. Let's start again. Let me put it in a proper form. So what will come first? Output, right? Or you put actual units. Just put the actual units here. Actual unit is what? 45,000, isn't it?
45,000.
Okay,
Yes.
let me put first here, first budget. First actual and what? Variance, isn't it?
Variance.
Okay. Variance. Okay. So the actual will be 45,000. Oh, that is unit, isn't it? So this will be 0. What will be the next item? Actual labor hours. Actual hours. Because we are going to use hours also. So we have the actual hours. Actual hours is
130, 50.
Okay. 130, 50. 0. So the next one we start for the kerosene sign because we are going to now use figures. We are going to now use figures. So the first item that will come there is what? Let's look at this one.
Sales value of production.
Okay. The first item will be what? Sales, right?
Yes.
So the sales should be what? What is the actual value for the sales?
2790.
There are 3 zeros at the top. So let us maintain the 3 zeros at the top. So we have sales. So the actual is what? Sales, the actual is what? Is
2790.
90.
Okay. 2790. Okay. But we budgeted that we are going to receive 2480 from 40,000, isn't it? And right now we end up selling 45,000. Are we going to still be realizing the 2480 from it? If we budgeted 2480 for 40,000, what should have been the figure for 45,000? How much should have been the figure? If 2480 is for 40,000, how much should have been for 45,000? Frida,
2790.
Frida, what did you get?
I think budgeted.
Boss, I beg you, okay. Please help me, like with the sales.
Okay.
Help me for one. I think I'll be fine.
Okay, the sales, the thing is we are saying that if we sell 40,000 units, we are going to get what? 2480, isn't it? You are saying that if you take 40,000 units of bags or 40,000 bags of cement to the market, you sell it for 2480. So if you end up taking 45,000 bags to the cement, are you going to be getting the same value again?
No.
No. So you get more, isn't it?
Yes, please.
How do you do it? What you normally do is that it is the actual unit that you are taking over the unit that you budgeted for times the cost that you budgeted for.
Okay.
So it's just like if 40,000 is equal to 2480, how much will be for 45 unit, like ratio? Okay, so let me do this one more. Is 40 is equal to 2480. 45 will be, we don't know, isn't it? We put X, isn't it?
Yes, please.
Then we cross multiply. This time this, this time this. So this time this divided by 40,000. That is all. That is how I'm talking about that. 45 over 40 times the figure. What did you get?
I got 2790. 2790.
Okay, are you okay now?
I said, so always the cost. Okay, I was thinking that the cost that you multiply with is the one for the actual.
No. The actual is the actual cost that you have incurred. So we are just saying that if we budgeted for this cost and we are now producing this, how much do you have spent? How much should you have spent? Not the cost that we spent. How much should you have spent before? That is what we are looking for. Are you okay? So it's just like you are saying that 5 of you are in the house. You are saying that you'll be spending 500 cedis every month. Now, if people are 7, you end up spending 800 Ghana cedis. How much should you have spent before? If 5 of you are spending 500 Ghana cedis, now people are 7. How much should you have spent?
700 cedis.
700 cedis. But you end up spending what? 800 cedis. It means that you spend 100 cedis more, isn't it?
Yes.
So the 800 cedis over here is the actual. But you, the 70 cities that you are finding is the amount that you should have spent before, which is the flex budget that we are talking about. Are you okay?
Okay.
So the actual is what we compare with what we should have incurred before. So actual, we don't do anything about actual. We just bring the figures there. Then we find the figures that we should have incurred based on the actual level of activity that they are talking about now. Are you okay? Prima, are you okay now? Okay, we can move on.
Yes.
Okay.
Yes, please.
Okay. You see, they have put profit here, isn't it?
Mhm.
So what we have to do is that we have to prepare this one like profit statement. So we have variable cost, variable cost, variable cost. So the variable cost, the first item that will come is what? Direct what?
Material cost.
Okay. So what is the actual? The actual, you just come and pick the figures for the actual. The actual is what?
442.
No.
Actual is 907.2.
Okay, 907 point what?
Point
2.
2.
So we have to come and find the cost that we should have spent before, the cost that we should have incurred before. How much
was
how
determined
much
as 900.
Okay, how much are we saying that we are going to incur for 40,000 units?
800.
800. So how much will you have incurred for 45,000 units now? It will be 45,000 over 40,000 times what? The 800. That will give us 900. What is happening?
It's 900.
Okay, what is happening? Do we spend more? We should have spent 900, but we end up spending 907.4.
So 7.2
0 point what?
7.
7.2 what? Adverse, isn't it? We spend more. So 7.4 adverse. We spend more. Are you okay now? The next item is what? Direct what? Direct labor. Okay. For direct labor, what are we going to use? Unit or hours?
Hours.
We use hours. Direct labor, we use hours. Are you okay? Okay. So what is the total hours that we budgeted for? What is the total hours that we say we are going to use? We are saying that we are going to use 3 hours per unit. How many units do we say we are producing? 40,000. So what will be the total hours? It is 3 times the 40,000 units. Are you okay?
So 120.
That will give us 120. So how much do we say we are spending for the 120? How much do we say we are spending for 120?
400.
400. So how much should we spend for the actual hours now, which is the 130 and 50? How much should you have spent? How much should you have spent? It's the same thing, the actual hours over the budgeted hours times the budgeted overhead cost. That is how much?
Formula again, say budgeted.
It's the same as the how we use
That's the 45 over 40,000 times
it's the same as
400.
it's the same as how we use the unit one. We just use the actual over budgeted times the budgeted cost. So in this case, we use the actual hours over the budgeted hours times the cost. That is all.
433.5.
433 point what?
5.
5. What was the actual overhead? It was 442.8. What is happening? Do we spend more?
I didn't get the 433, no.
Okay, let's come here. Let's settle this once and for all. How many hours are for 400?
442.
120.
120, okay. If 400 is equal to 120 hours, isn't it?
Yeah.
Do we know the amount that will give us the actual hours used? No, we don't know. So it's equal to the actual hours used is 130,050. What do we do from this side? We cross multiply, isn't it?
Yes.
So this time this time this. Find the x for me.
Where to be?
This will give us 120 x is equal to 400 times what? 130050. So for you to get the x, you divide both sides by what? 120,000. So what will be the answer?
133.5.
So the person who said he didn't get a 43.5, are you okay now? The person who said he didn't get a 43.5, are you okay now?
Yes.
So if you can't do it, just do it like mathematics. If this is equal to this, then what should have been this? Then you find your way and go. Are you okay? Okay. But you can see that what we are doing over here is that we are going to divide all of them by what? 120, which is the same as the actual hours over budgeted hours times the 400. So if you want to find the first item is equal to the actual level over the budgeted level times the budgeted cost. It doesn't matter whether it is unit, it is hours, it is everything. It's the same thing. Actual level or actual unit level or actual activity level over the budgeted activity level times the budgeted cost. That is all. So if it is labor hours, it is the same actual labor hours over budgeted labor hours times the budgeted labor cost. If it is unit, it is actual unit over budgeted unit times the budgeted material cost. The same thing. It doesn't matter whether it is unit. That is why you're using actual. They are all actual. Prima, are you okay now? Okay. So let's come here. Are we spending more? Well, we are spending less.
That's spending more.
We are spending more by how much?
9.2.
9.2.
0.2. Yeah.
9.2 or 3?
Okay.
We should have spent 433, but we end up spending 442.
9.3.
It's what?
9.3.
9.3. You have calculators there.
That's 9.3.
It is 9.3.
Yes, please.
So is that going against us or is going in our favor?
It's going against us.
So that will be adverse, isn't it?
Yes.
Okay. The second one is the next item is what? Variable production what? Overhead. Then you just take the actual and come and put it under the actual. So the actual is this one. Okay. Variable production overheads is a portion based on labor hours. So use labor hours to determine the cost. Don't use material. So if they give you hours, use the hours for labor and also variable overhead. But if you're not giving, you are giving only material, then use the material for all of them. So what was the actual labor hours? What was the actual labor hours?
Yeah.
What was the actual labor hours? Prima, what did you get? Prima, what did you get? Jocelyn, what did you get? Messi, what did you get? Portia, what are you getting?
Why are we using the labor hours? I don't understand.
Variable production overhead is assumed to be absorbed or to be influenced by labor hours. We don't use material. We don't use material. Variable production overhead is being assumed to be dependent on labor hours, not material. Are you okay? So I'm saying that whenever you are giving the unit and then the labor hours, use hours for direct labor and variable production overhead. But if you are not giving hours, then you use unit for all of them, like the one that we did in the first one. But if you are giving hours, you use the hours for labor and production, variable production overhead. Are you okay? Okay.
Yes, sir.
So what are you getting? What is the amount? It is the actual activity level over the budgeted level times the budgeted cost. So what is the actual labor hours?
130.
0.5.
Divided by divided by what?
So I had 260.1.
Okay, 260.1. That is the answer. 260.1. So what is happening? Are we spending more? By how much?
24.3.
24.3. Adverse, isn't it?
Yes.
Okay. So let's come here. After this one, what do? We find contribution. We find what? Contribution, because they are preparing this one in profit or loss format. So we find contribution. How do we find contribution? How is contribution calculated? How is contribution calculated?
Sales minus variable cost.
Sales minus what?
Variable cost.
Sales minus total variable cost. Okay. Okay. So this is our contribution. What do we start from? We now start from overhead cost, isn't it? The first one is fixed production what? Fixed production what? Fixed production overhead. Fixed production overhead. Fixed production overhead. So the fixed production overhead is, the actual is what? Actual is what? 212.4, isn't it? 212.4. What will be for the, okay, this is for actual. What will be for the flexible budget?
So that one, are we using the normal one or we are using the labor?
We don't flex fixed production
yes,
overhead. So you just take the 187. It has nothing to do with activity level. No matter what you are producing, you are going to incur the same cost. So we just pick that one. Are you okay? So we should have spent 187, but we end up spending what? 212.
212.
Is that against us?
Yes, it's an adverse.
Okay. And that would be 25.4 adverse. Can we move on? The next item is what? Variable admin what? Overhead. Variable admin what? Overhead. This one, it will vary by what? What activity level will trigger variable admin overhead? Variable admin overhead will vary with what? With what level? Is it labor hours or production level?
Labor.
Okay, you can decide to use labor or production. You can use any of them because we don't know which one will be there. This thing, so you can use any of them. So let's use labor hours. Let's use labor hours. So what is the actual labor hours?
One 30050
Divided by what?
120,000
Times what?
times 133.
What is the answer?
One four four.
144.
144. Yeah, 0.14.
Okay, 144 point what? 14.
14.
Are we spending more? By how much?
Point.
3.46.
3.46. Adverse. Is it adverse?
Yep.
Okay. The next item is
Yes,
what?
adverse. Yes.
The next item is what?
Sir, sir,
Yes.
what I want to understand is if we are
Okay.
giving the variable overhead to calculate, we should
Okay.
always calculate the variable overhead and then the variable admin on the labor.
Yes. Or if you are not giving labor, then you use unit for all, like the first one that we did.
Okay, the normal unit.
Yes. But if you are giving unit and labor hours, then you have to ask yourself which of these will vary with labor hours and which of these will vary with units. Which of these costs is driven by unit level and which of these costs is driven by labor hours? Are you okay?
Okay.
All right. So the next one is fixed admin overhead, isn't it?
Yes.
Fixed admin overhead. What are we going to do? What is the actual?
Madam, you are disturbing my class. My cell will beat you.
What is the actual? 180, isn't it?
Mm-hmm.
So what are we going to do? Are we going to flex it? Are we going to do something on it?
Fixed admin.
Is fixed. So if all fixed costs are not what? Flexed.
Don't do
We assume that they don't change with unit or labor. They don't change. No matter how the activity level, they will still be the same. So we stick to the 160. We still take the what? The 160. Are you okay?
Yeah.
Okay. So we still take the 160. And what is happening? Are you spending more? Are we spending more?
Yes, we are.
Okay. Okay. So right now, let's find our profits. Let's find our profits.
Yeah.
Our profits will now be this minus this minus this minus this. Okay. Are we okay up to this level, or we have any issue? Are we okay up to this level? Are we okay up to this level?
Yes.
Yes,
Okay.
please.
Okay. So if you are giving question on flexible budgets, you can do it. We don't do anything to the actual cost. The only thing is, okay, we have budgeted for this and we end up doing this. So how much we have incurred based on the budget? Then that is what we call the flexible budget. All right. Discuss the behavior problems brought out in this situation. So we have read a question. What are the things that you think will be a problem there? What do you think will be a problem in this particular case? Okay, the first problem is people will be demotivated. You can see that a lot of people are saying that the consultant doesn't know the nature of the activities of the school. Maybe they are just applying, maybe already made approach to them. So people, they feel that they are not part of the development process, the budget setting process. So with that, they will not be willing to get involved because they are not involved in the budget setting process. So they will be motivated. There will be an issue of demotivation. There will be an issue of demotivation, and people will feel reluctant to contribute because they feel like they are not part of the process. They feel like they're not part of the process, and they feel like they are not consulted. So there will be one of the behavioral problem is an issue of demotivation. Issue of demotivation. Issue of what? Demotivation. Are you okay there?
Yes.
What other issue do you think will be appropriate over there? What other issue? What other thing do you think people will be doing because of this particular issue? What other thing do you think? I've mentioned one, demotivation. If you are an employee in an organization where your boss or people will just come and like force things on you people that you should do it, you are not consulted, you are not part of the process, how are you going to feel? The first one, you feel demotivated, isn't it?
Yes.
Okay, what will be the next one?
You will not contribute fully.
Okay. Okay, so achieving achieving the set target will be what? Will be
delay.
Yeah, it's not be delayed, it will not be successful because people will not be willing to give up to their full capacity. Are you getting it? People will be feeling lazy to work. They won't deliver up to their full capacity. Okay, what again? What do you think you will do again? Do you know that people don't read their notes? Okay, let me show you the answers.
Yeah, no, it's true.
These are the issues. Behavioral aspects of budgetary control. These are the behavioral issues. The first one is motivation and cooperation. To be fully effective, since they are not involved, they will not be able to work together as people, as individuals. So the first one has to do with motivation and cooperation. There won't be any cooperation. I have spoken about demotivation already. Failure of what? Goal consequence. It means that when people are not involved, everybody will be doing his own thing. They are not going to have one objective that they are going to achieve. There will not be any unity of objectives because you are not involved. Everybody will do his or her own thing. production department will have their own target, sales department will have their own target, and they are all working towards a different objective. They're not going to have a unity of objective. They're not going to have a same mindset as to how they should achieve the objectives of the organization. Because the manager for the sales department will be saying that, okay, since the production department, they want to do their own thing, they should also do it. We are also going to do our own thing. There will also be an issue of budget negotiation. There will also be an issue of budget negotiation. So people, the only thing is, instead of you to be doing, to fully achieve the budget, you will be sorting the budget. You will say, okay, we should forget about this one and do this one. We should forget about this one and do this one. This one is not necessary. This one is necessary. Let's do this one. That is what we call a budget negotiation. You will be implementing the budget anyhow, picking only certain items and using it and forgetting about other items. That is what we call budget negotiation. Budget negotiation. So those are some of the behavioral issues. Since you don't want to read, I have shown you where you can get those answers. All right, let's look at a situation where they'll ask you to prepare a flexible budget, but they'll give you so many activity levels. So the approach that we use is high-low method. High-low method. So what we do is that they'll give you different levels. Okay. So they'll give you different budget for different activity levels. So they'll say that, okay, 10,000 units, 12,000 units, and 14,000 units. Then they will give you the cost for all of them. If we are producing 10,000 units, the cost is 100,000. This is 140,000. This is direct material. Let's assume that is direct material. Direct material. Then this is 175,000. Then they will give you direct labor to with each own cost. Direct labor with its own cost, maybe 60,000, 80,000, and also maybe 100,000. And it will give you all the listing like this. You can see that you are giving different activity level, isn't it?
Yes.
You don't know which of them that you are going to use to find the actual cost. Are you okay? Because you can see that the one that we have solved, you are only giving the actual budgeted unit, which can be 45,000 or 10,000. But this one, they are giving you different levels. Different levels. So the idea that we use is that we call something high-low method. High-low method. High-low method. High-low method. So high-low method, what we do is that we pick the cost for the highest activity level. What is the cost for the highest activity level here for material?
14,000 units.
What is the cost for the highest activity level?
175,000.
So we take the 75,000, 175,000 minus the cost for the lower activity level for material.
That's 100,000.
100,000 divided by the highest activity level minus the lowest activity level. So divided by, what is the highest activity level? 14,000 minus what? Lowest activity level? 10,000. So what will be the answer there? So this is what we call the high-low method. We take the cost for the highest activity level minus the cost for the lowest activity level, all divided by highest activity level minus the lowest activity level. That is what we call high-low method. What answer are you getting?
$164,000 999.
Is that?
If I'm correct.
How much are you getting?
I'm getting something like this. 164,000.
No, that is too much.
Okay, maybe 26.
175 minus 100,000 is how much? $175,000 minus 100,000 is how much? Are we here?
75,000.
So 14,000 minus 10,000 is how much?
4,000.
4,000. 75,000 divided by 4,000 is how much?
Okay.
18.75.
18.5. So this 18.75 over here is assumed to be a variable cost per unit. Variable cost per unit. So this is a variable cost per unit for one material. So what we normally do is that come and use this to multiply all this and see whether you are going to get the same answer. Use 18.75 to multiply 10,000 and see what you are going to get.
18.7.
How much are you getting? You are getting 187,500, isn't it?
Yes.
So it's because I use assumed figures. That is, I just want to show you. At the end of the day, every figure that you get over here, if you multiply it, you get the same answer. But sometimes it can happen that after doing this, you have gotten 7.5.
Okay.
So if you get 7.5, it means that 7.5 per what unit, isn't it?
Yes, please.
So you use the 7.5 to multiply the 10,000 units and see how much are you going to get. That will give you how much?
75,000.
But what was the total cost? What was the total cost for the material here?
100,000.
So what is the meaning? It means that there is a fixed cost element of what? 25,000. Are you okay?
Yes, please.
Okay. So sometimes that is what we do. That is what we do. So sometimes some of the costs will be including both variable costs and fixed costs. Both variable costs and fixed costs. Both variable costs and fixed costs. So if we are getting 17,500, it means that there is a fixed cost of what? 25,000. So if the actual output level is now 16,000, what would have been the variable cost per material for the 16,000 units? It should have been what? 7.5 times 16,000, isn't it? That is how much? 120,000, isn't it?
120,000.
That is the variable cost. But the material cost also include fixed cost of what? 25,000, isn't it?
Yes.
So the actual cost for the material now will now be what? The variable cost plus the fixed cost, isn't it?
Yes.
145,000. That is how we go about the high-low. High-low, some of the items will be including both variable cost and fixed cost. So you use the idea of the high-low method to fish out the variable cost per unit. So for you to find the total cost, then you multiply the variable cost per unit by the actual activity level. After that, then you add the fixed cost element to that particular answer. Then you get it. Let's pick a question and see. Let's pick one simple question and see. Let's come here. Let's come to question 3 before we solve the other one. Then we say bye-bye to flexible budget. Let's look at the question 3. Let's look at the question 3. Let's look at the question 3. Someone should read the question 3 for us.
Maimuna Limited is reviewing the selling price of its products for the coming year.
Okay.
A forecast of the annual cost that would be incurred by Maimuna Limited in respect of this product at differing activity levels is as follows.
Okay.
Annual production units,
Okay.
100, 160,000,
Okay.
200. Direct material, 200, 320, 400. Direct labor, 600, 960, 1,200. Overhead, 880, 1228, 1460. The cost behavior represented in the above forecast will apply for the whole range of output up to 300 units per annum of this product required. Calculate the total variable cost per unit and total fixed overhead. II states the total cost function.
Okay. You are done, right?
Yes, please.
Okay. So this one, you can see they are giving you direct material cost for each level, isn't it? Okay. They are giving you the cost behavior represented in above forecast will apply for the whole range of output up to 300,000 units per annum of these products. So the issue right now is the direct material cost has been given at different unit level. I just want us to, this is not for flexible budgets. This is for high-low. I want us to test the idea of high-low. So whenever you have a question that you are giving costs for different activity levels, maybe for three different activity levels, you have to know that this question is about high-low method. So what we do is that we want to test whether some of the direct material costs are fixed and some are variable costs. We also want to see whether some of the direct labor costs are fixed, some of them are variable. And we also want to see if some of the overhead costs are variable and some of them are what? Fixed. Are we okay? All right. So what is the highest activity level here? What is the highest activity level there?
200,000 units of production.
200,000 units. And what is the cost for that?
Sir, can we see the question?
Don't you have a question on your phone? What is the highest activity level now? Highest activity level is what?
It's 200,000 units.
It's 200,000 units. Are you there? But what did we say about the high-low cost? What did we say how a low method is being used? We said the variable cost per unit is calculated as variable cost per unit is calculated as the cost for the highest activity, isn't it? The cost for the higher level of activity. That is how much?
200.
No, the cost, not the unit.
The cost
400,000.
It's 400,000, isn't it? The cost for the
it's not only material, it's composite cost.
No, we are looking at material cost. We are doing it for each item.
Okay.
So that will give us 400,000, isn't it?
Yes.
Minus what? The cost for the lowest activity level for material is what?
200,000.
200,000. All this divided by the highest level of activity is what?
200,000.
200 units. Isn't 200,000 units?
Yes.
Minus the lowest level of activity.
100,000 units.
100,000 units. Are you okay there?
100.
So what will be the answer? So variable cost,
2 cedis per unit.
Variable cost per variable cost per material is equal to, this will give you 200,000 divided by what? 100,000, right?
100,000. Yes.
And that will give us two CD.
2 cedis per direct material.
Okay, 2 CD per direct material. Okay. So that will give us 2 CDs. Are we all okay with how we calculate that one? It is the cost of the highest activity level minus the cost of the lowest activity level over the highest activity level minus the what? The lowest activity level. We pick it in the order of how we pick the what? The cost. Don't bring the highest activity level, the cost for the highest activity level first, and you now be bringing for the material, you bring the lowest activity level first. No, we pick it in the order of how we pick the cost. Are you okay? So let's come and perform a certain test over here. Every material is how much?
2 cedis.
So let's come. If you are producing 100,000 units, what should have been the cost for the 100,000 units? What should have been the total cost for?
200,000.
So you can see that we have gotten the 200,000 here. Let's come to 160. What should have been the cost?
320.
Let's come to 200,000. What should have been the cost?
400.
So what can you say about the direct material cost?
It varies directly with level of activity.
So direct material cost is purely what? Variable. It's purely variable. It's purely variable. There's no indirect cost out there. Are you okay?
No fixed cost.
Do that for direct labor. Let me see. Get a direct labor cost per unit. Let me see. Direct labor cost per unit. Do it. Let me see.
So they are variable.
What is the cost per unit?
6.
It's 6, right? Isn't it?
Yes.
So have you performed the test to see whether there is a fixed element or they are all variable elements?
There isn't. When I test mine, there isn't. I don't know of the others.
Okay. So what you do is after getting the cost per unit, use the cost per unit to multiply all the activity level and see whether you get the actual figure there. If you have gotten the actual figure, it means that that particular cost is purely variable. Are you okay? Come to the overhead. Do the overhead for me.
I think that will be 5.8.
5.8. That is per variable per unit, isn't it?
Yeah. Yes.
5.8. Do you all get a 5.8?
Yes.
So after this, what will you do again? You perform the test, isn't it?
Yes, please.
Perform the test.
Yes.
Let's see.
I think there's an element of fixed cost.
And that is how much?
300,000.
So if you multiply the 5.8 by the 100, you are getting 580, isn't it?
Yes.
And now you can see that it's 380. So there's a fixed cost of 300,000, isn't it?
Yes, please.
Okay. The question says we should find total variable cost per unit, isn't it?
Mm-hmm.
So how do you find the total variable cost per unit? Is the direct material cost per unit? That is how much? That was how much? 2 cedis.
Yes, please.
So it will be 2.
Yes.
Direct labor is how much?
6.
6. Okay, 6. And the overhead is how much? Variable cost for overhead is how much?
5.8.
5.8. So what will be our total variable cost per unit now?
$13.8.
13.8. Okay. 13.8. Are we okay with this side?
Yeah.
Okay, the question says what? The question says calculate the what? The total fees overhead. So how do you calculate the total fees overhead? You just take one of the fees overhead costs. Take one of them. Someone can decide to take the last one. Someone can decide to take this one. Are you okay? 14.60. So if the total cost for how many units is that? 200 units, isn't it?
Yes, yes.
And variable cost per unit is what? 5.8. It means that the total variable cost should have been 5.8 times what? 200 units, isn't it?
Yes.
That should have given us how much?
1168,000.
1160,000. But they are saying that the total cost is what?
1468,000.
So it means that there is a fees cost of what? 300,000. So
300,000.
if you want to calculate the fees cost, you can pick any output level. Someone can pick the first one, someone can pick the third one, someone can pick the second one. You get the same answer. So our total fees cost is how much?
Total fees cost
It's 300.
Yes.
It's 300. Are you okay? All right. State the total cost function. How are you going to state the total cost function now? Total cost is defined as variable cost plus what?
Fixed cost.
Fixed cost.
Okay. So total cost will now be what? What is the total variable cost?
13.8.
So 13.8 times what? At output level, which is Q. So if you know the number of units that you are producing, you just multiply that unit by 13.8. That is the variable cost. Are you okay? Then you add it to the fixed cost. The fixed cost is what? 300. It has nothing to do with what? The output level. So if you are producing 2,000 units, your variable cost that you are going to incur will be 13.8 times 2,000. Then you will incur fixed cost of 300. That is the total cost function. Are you okay? All right. Let's look at question 2.
So please, I have a question to ask.
Okay, ask.
The preamble after the question, the cost behavior represented in the above forecast will apply for the whole range of output up to 300,000 units per annum.
Okay.
So my question is, assuming the output was above 300,000 units.
There will be a question. There will be additional information saying that if the output level is beyond 300,000, the company has incurred additional fees overhead cost of this.
So it means that within that range, the fixed cost is it's not
changing. Up to 300,000.
Okay.
Fixed cost. Okay. Ankasa, nobody should tell you that fixed cost is fixed. It is fixed within a certain activity level. If you go beyond that activity level, then you incur additional fixed cost.
Increase. Yeah.
Are you okay? But this one, all the output level is within the range, so fixed cost will be assumed to be the same. But the question that you have asked right now is also relevant to high-low method sometimes. If the output level is higher than that, what do we do? Okay, don't worry. There is a question which is under short-term decision making. We'll do the high-low under short-term decision making very well. Okay. Can we move on now? Okay, let's come to question 2. Then we say bye-bye to flexible budgets. Let's come to question 2. Who is reading for us?
The following monthly budgeted cost values has been taken from the budget working papers of ABC Limited for the year ended 30th September 2019. Activity level 75%, 85%, 95%. Direct material, 9375, 10625, 625.
You forget about that one. Count additional information.
Okay. During September 2018, actual activity was 1292 units into brackets, which was equal to 68% activity. Then we have the direct material, 10,500, direct labor, blah, blah, blah. Required. Prepare a budgetary control statement for ABC Limited on a flexible budget basis for the month of September 2019.
Okay. Okay. So what if you see this? This is an ICA question. If you see this question, what comes to your mind? It is based on what?
High-low.
High-low. So this one high-low, they are not giving you what? Unit, they are giving you what? Percentages, isn't it?
Percentages, yes.
So you use the idea of high-low. What is the highest activity level here?
95.
95. What is the lowest one?
75.
So how do we find the cost now? It is the cost for the highest activity level, isn't it?
Yes.
Minus the lowest activity level, or divided by the highest activity level minus the lowest activity level. Okay, but let me put this thing here. They say we should prepare flexible budget, right?
Yes.
So we put question 2 here. Question 2. Flexible budget. For the year ended, they put the year there. So if you are doing it, put the year there yourself. For the year ended. So we start with what? Output level, isn't it? Let's start with output level. Where is Kathy? Prima.
Yes, please.
Where is Kathy?
Please, she's part of the class. So.
Really? Which name is she using? Oh, today she's.
Sir, I just joined.
But today you're on top of issues, yes. So you are not disturbing.
I said I just
joined.
So I don't even know what you are doing, but I don't.
I've wanted her not to come and ask questions because she's late.
Okay, she will not ask. She knows that she can't ask. But she will be fine, don't worry. So
I'm watching you.
We are at the output level, isn't it? The next thing that you are going to bring is the cost, because all the things that you are going to bring over here will be relating to money. So if you put the output level, you are telling the examiner that the budget that the flexible budget is for an output level of 68%. That is the actual one. Are you okay? So we do this one for the actual. So the actual activity level is what? 68. Don't be bothered by the 12,000 units. No, just use your percentage and go. Okay. So the direct material is what? The first thing that will come is direct material, isn't it? What is the actual cost for the direct material? It's 10,500. Okay. Okay. So we have to do some workings, right? So let's come and let's try the direct material cost per unit using the idea of what? High-low. So what will be the figure now? The highest activity level is what? 95.
95.
And what is the cost?
11,875.
11.
Okay. Minus the lowest activity level. What is the cost there?
9,375.
Okay. Okay. Divided by what? The highest activity level. That would be what? 95 what?
Minus
25% minus what? 75. Is it 75?
Yes.
Okay. So what will be the answer? What will be the direct material cost per percent?
125.
125 per what? percentage, isn't it? 1% is 125. So after this, what are you going to do? You are going to perform the test and see whether it is purely what variable or there is a fixed element, isn't it?
Yes, sir.
Okay, let's come and try that particular thing. So 125 times 75%. What are you going to see? Is it the same as the figure there?
93.75.
93.75, isn't it? It's 125 per percent. 1% is 125. So 75 is 125 times 75. Is it the same figure?
No.
1% is 125. So what would be, don't say you are going to do 75% over 100 times 125. 1% is 125. So 75% means 75 times 125.
And
You
the
get
answer is
9375.
9,000.
375.
9,075.
Okay, use the same
You get
125 to
9,375.
multiply 85 and see.
So you get 11,875.
I'm getting 10,
85.
85.
10,625. You can see that the answers are the same as the
10,625.
one that we have over here, isn't it?
Yes, sir.
So you can see that the direct material cost is purely what?
Variable.
Okay. But what is the actual activity level now?
68%.
So if 1%, we budgeted that 1% is 125, what should have been for 68%?
85.
8,500.
8,000.
500.
Okay. 8,500. Are we okay with that one? Okay. Let's come to the next. The next level is direct what?
Labor.
So find the cost per percentage for me. The actual one, we don't do anything, just pick the figures given to you. The actual, just pick the figures and come and put them there. So this is 12,250. We don't do anything to them.
Yeah, I'm lost to the 8,500.
How much are we getting for 1%? 1%, how much are we getting?
125.
So what is that? What is the actual activity level now? It's not 68%.
Yes.
So if 1% is 125, how much will be for 68%?
Oh, okay.
So what figure are you getting for the direct labor per percent? Direct labor per percent.
150 per percent.
150.
Yes.
150, isn't it?
Yes.
So go ahead and do that test and see. Multiply by each activity level at the top there and see whether the costs are the same.
So I had 15% or
Do it again.
Okay.
Yeah, it's correct. 150.
It's 14,250 minus 11,250. The cost for the highest activity level minus the cost for the lowest activity level, all divided by the highest activity level minus the lowest activity level.
Okay, yeah, I got it.
Okay, then after that, you use your answer that you have gotten per percentage. This one is not unit, we are using percentage. That's why I'm saying that use percentage. So you have 150 multiplied by 75. What figure are you getting? The same figure.
Yes.
If you multiply by 85 to the same thing.
Yes.
If you multiply by 95 to the same thing, it means that the direct labor cost is also what? Is purely what?
Purely variable.
Variable. So what should have been the cost for 68% now? If 1% is 150, what should have been the cost that we will incur?
10,200.
10,200. Are we okay there? Okay. Okay. The next one is direct what? Expenses. Direct what? Expenses. So direct expenses is what? What is the cost per percentage for the direct expenses?
6175.
Then that one will be 65%.
Is what?
65.
65% per percent then.
Yes, please.
Okay, so
65.
so perform the test and see. Let's see what happens.
I
think it's purely variable.
It's purely what?
Variable.
So if we are having 65%, what will be the cost for 68%?
$4,420.
It will be
4420.
4420. So let's go and pick the actual cost that we incur. Okay, we are not even do the variance at once. Let's finish that before we do that. So this will be 5,600. That is the cost incurred, right? That is the actual cost. What will be the next one? Production what?
Overhead.
Overhead. So you perform the test and see. Perform that test and see. What is the actual cost for production overhead? The actual cost is 6250.
40%.
It's 40 per what percent?
Yes, please.
Okay, so perform the test and see whether some of the costs are variable, some of them are fixed.
There is a fixed element.
There's a fixed
Yeah.
element.
Yes, please.
Yes.
So how much is the fixed element?
To be 3,200.
So 3,200. So that means for every percent is how much? Variable cost is what? For every percent, what is the variable cost per every percent? Is it 40 that we have gotten?
Yes, please.
So for 68%, what will be the variable cost for the 68%?
2720.
2720. But there's a fixed cost of how much?
3,200.
3,200.
So what will be the total cost now for the 68%? It will be the variable cost plus the fixed cost, isn't it? And that's how much? That is how much? That is how much? It's not 40.
5,920.
5,000.
920.
5,920. Okay. Are we okay with 5,920? If you are doing if there is a fixed element, we are saying that the variable cost per percent is what? 40, isn't it? Is it 40 that we have gotten? So if it is 40, it means that for 68%, the variable cost that you are going to incur will be 40 times what? 68. But you are going to incur additional indirect cost of 3,200. So the total cost will not be the variable cost plus the fixed cost. That is how come we got the 5920. Are you okay? Can I move on?
Yes, please.
We say no. How do we calculate total cost? Total cost is not total
There's
variable
not the
cost.
production, no.
Then it's what?
It's not the production. I'm even lost from the labor. Because it's like I'm the only person who calculated and I didn't get that 150 that they used to multiply.
You didn't get a
I'm
150. How did you
confused from
calculate
that
it?
side.
How did you calculate it?
I did the 14,250 minus 11,250
Okay.
divided by the
Mhm.
95%
Mhm.
minus the 75%.
Okay. Then what did you get?
And I had 120.
120.
The,
Redo
yes.
it again. 14,250 minus
So
11,250.
she has
What?
to obey board mass. If you work this separate before integrating them.
Okay, that is what I'm telling you. 14,250 minus 11,250. What is the answer?
I had 3,000.
Put it somewhere. 95 minus 75 is what?
20.
20. Okay. Now take the answer divided by the 20 and see.
Okay.
Don't go and be doing normal division. If you want to do this, put it in like division, like fraction. Like fraction.
Okay. The mistake I did was I did it 25%.
Yes.
So you
I've
lost
gotten
yourself,
it.
not that we
Yes.
lost you. Okay.
But I needed to. So
So can we move on now? The next one is our fixed selling overhead, isn't it?
Yes.
So come and pick the actual cost. Actual cost, we don't do anything to them. We just adjust those ones to reflect the actual activity level. Okay. What is the cost?
$12,000.
Minus the lowest one is what?
$10,000.
Divided by
20.
okay.
100.
That will be what?
100.
Then you perform the test and see whether there is a fixed element there. Is there any fixed element?
It's supposed so because you don't get a set.
Yes, please.
The fixed element is how much?
2,500.
So what will be the total selling overhead for the actual activity, which is 68%? What will be the total cost?
6,800.
6,800. I said total cost, not variable cost.
To be 9,300.
9,300. Are we okay with that?
How did you get the 9,300?
What is the variable cost for the actual activity level? Selling overhead variable cost. What is the cost there? What is the variable cost? The selling variable overhead cost for 68% is how much? The person who is saying, how did you get the 90? That is the person I'm asking. What is the selling variable overhead cost for 68%? The person who said,
I'm confused. I'm confused.
What did you get for the variable cost? What did you get per percent? What did you get?
I had 100.
How did you calculate total cost? I'm still talking to you. How did you calculate total cost?
So what total cost? I'm confused.
I'm not talking about total cost for this particular question. How do we calculate total cost in general?
Variable cost plus fixed cost.
Okay, what is the variable cost for the 68% for selling overhead?
100.
That is per percentage. The actual one is 68%. So what will be the total variable cost?
6,800.
What is the fixed overhead cost for selling overhead?
Fixed overhead for selling overhead. I don't know. I'm confused.
If you multiply 100 by 75, how much are you getting?
7,500.
What is the selling overhead cost there?
Where?
What is the selling overhead cost for 75%?
10,000.
Is what?
10,000.
What should have been the cost? If it is purely variable, what should have been the cost?
7,500.
So what is the meaning of the 10,000 there?
2,500.
Which is what?
Fixed cost.
So if you are getting a variable cost for 68% to 6,800, which is the total variable cost, you have to add a fixed cost to it, which is a 2,500.
Okay.
Are you okay now?
Yes.
Okay. So 9,000 what? Okay. Can I move on? Okay. The next one is administrative what? Overhead. Can we say something about administrative overhead? Actual cost is what? Actual cost is what? 14,200. Hey. What am I doing? Selling. Shit. Selling is 15,550. And this is 14,200. What can you say about administrative overhead?
I think that one is purely fixed.
It's purely fixed. You can see that at every level is what?
Yes.
13,000. So it doesn't change anything. So we put the 13,000. You can't do anything. If you do equal, you get 0. You get a variable cost to be 0. That should tell you that it is purely what? Fixed. Are you okay? Okay, let's come and find our variance now. So how do we find the variance? This is flexible, this is actual. So what is the difference there? Is it 2,000?
Yes.
Is it favorable or adverse?
Yes.
Adverse or favorable?
Adverse.
Adverse, okay. Let's come to the next one. What is the difference?
2050.
2050, favorable or adverse?
Adverse.
Okay. Let's come to 4420.
1180.
1180, favorable or adverse?
Adverse.
The next one is what?
330.
330, favorable or adverse?
Adverse.
Okay. The next one is what?
150. 5850.
5850, favorable or adverse?
Adverse.
Okay, let's come to the next one. 1,200, favorable or adverse?
Adverse.
Adverse, okay. If you like, you can add all the costs. If you like, you can put the total here. I don't have any problem. Are we okay now? So next week, tomorrow or next week, we look at reduction budget or functional budget. Let me just put it functional budget. Then maybe if you are able to finish early, like we solve 2 questions, we move on to cash budget. Then throughput came last sitting, so I'm not sure it will come again, but we can still look at it, so no problem. So tomorrow we do functional budget and maybe some part of cash budget. Then maybe next week we look at standard costing and variance analysis. Okay. Do you have any question? So if you see a question on flexible budget, you can do something, isn't it?
Yes,
You can try something, isn't it?
yes, please.
Okay.
Yes.
So I'll search for questions. There are a lot of questions there. So go to the questions, whether you get some questions on that. Try to solve it. If you have problem, my number is there. Call me. Okay. So we meet tomorrow.
Fine.
Okay. Yes, what are you saying?
Hello. I'm saying what time?
Same time.
Okay.
All right. All right. Tomorrow.